Hello, everyone. I'm Ernie Humphrey, the CEO of Treasury Webinars. I would like to thank everyone for taking the time to join us for our webinar today, Payments Fraud, 10 Reasons It Deserves Your Attention. First, I would like to thank our webinar partner today, TIS, whose strong commitment to thought leadership helps us make this webinar possible. And I truly appreciate their mission to serve the Treasury and finance professions. Today, my co-speaker and I, John Paquette, will review the key results of leading payment frauds and control surveys and share best practices that companies are leveraging to mitigate and even eliminate payment risk exposures in any business environment. Before we delve into the content, I'm going to offer a few quick words about Treasury webinars, cover a few housekeeping items, and then cover our learning objectives as they offer the pillars of our value proposition for you for investing an hour of your valuable time with us today. And then I'm going to introduce my esteemed co-speaker for today's webinar, John Paquette. At Treasury webinars, our mission is to serve the Treasury, AP, AR, and all departments up through the office of the CFO to help them deliver more value. Anyone interested in receiving CTP credits for today's webinar, you will have to answer all of our polling questions here today, stay on for the duration of the webinar, and answer the short survey that will launch immediately at the conclusion of the webinar today. If you have any questions regarding CTP credits, please send an email to Ernie@treasurywebinars.com. Again, that's Ernie@treasurywebinars.com. We appreciate everyone's consideration in answering the short survey that will launch following the webinar today, as we always strive to improve the ROI we offer our event attendees for their valuable time. This is more important than ever given the amount of virtual events people have been attending and the fact that most of us may have webinar and Zoom fatigue, but fear not, John and I are going to have an interactive conversation today, and we are going to do our best to keep you engaged and offer you something that is a unique webinar experience. Now, as far as our learning objectives today, our promise to you, your value, we want you to understand current trends in payments fraud activity, and we'll also add our color in terms of how we see those possibly changing in the future, right, and taking into account COVID, and then how we were going to probably work in these hybrid business environments. We'll help you identify payments risk exposures at your company, and probably most importantly, help you identify specific tactics to leverage and eliminating or mitigating payments risk exposures at your company. And for many companies, those exposures have changed as they've had to transition into that remote environment. Probably a good byproduct of this is some companies, many more than I originally expected, have invested in technology to make payments more efficient and more secure, and be able to do those really virtually. And so I think that's helped on a lot of fronts. And so let's go ahead and take that into consideration. And then a little bit about our agenda. We're going to talk a little bit about payments in the coronavirus. Then we're going to dive in to some survey results, payments fraud trends. We'll talk about risk exposures, exposure mitigation, and then we'll offer some of the bottom line and what I see as some actionable advice, which is incredibly important. Before I dig in too deep, I'd like to welcome my esteemed co-speaker for the webinar today, John Paquette. John is a senior finance expert with TIS. In his role, he assists clients and prospective clients in finding the best use of technology that TIS offers to solve their organizational challenges. Prior to joining TIS, John held various finance and treasury positions in US-based organizations. Most recently, John held the role of Senior Director of Treasury for a large healthcare organization. And John holds a BA in economics from Merrimack College and an MBA from the Carroll School of Management at Boston College. John, as always, it's a pleasure to have you on the webinar today.
Yeah, thank you, Ernie. Thanks for having me.
Okay, so let's dig in really on payments, and COVID-19, the coronavirus. And so, some of these things we've actually been in this environment a little bit. So let me go ahead and hand the floor over to John to drive us through these next few slides. John?
Yeah, sure, Ernie. Thanks. Yeah, I think it's hard to talk about payment fraud mitigation without talking about the circumstances that most organizations are dealing with today, really managing these variables from a work from home setting. For most organizations, these are not normal processes today, right? So you don't have access to the same systems and technology. You don't have the same level of visibility over your processes. You're doing things a lot more manually, right? And so these present a lot of operational challenges, I think, for the business themselves, but also the fraudsters are aware of these abnormal situations, right? And they're looking to exploit them specifically, through techniques that are effective in these types of situations, such as business email compromise, phishing scams, fake invoices, and things like that. So, really, the types of processes that most organizations are dealing with today, if today they previously processing everything in a secure kind of payment environment where everything was straight through processing, really no ability to manipulate payment files from the back office to the banks. Where Treasury is really the overseer of these processes, we've moved to more manual processes, right? From both the payment input perspective, a payment approval perspective, even authorizations for invoices and things like that are being passed more commonly through emails and things like that. And people are using e-banking portals, I think, a lot more commonly for payment approvals and things like that too. So these are some of the risks that I think exist as a result of these change in processes, right? And I think that a lot of organizations have been able to adapt their policies or processes in a strong way to strengthen them so that they have better, approval policies in place and things like that reflect the times. I think above all else, and Ernie kind of alluded to it too, is that people are really getting in touch with the gaps in their payment processes as well, whether those be gaps for control reasons, for organizational reasons, training reasons, or even technology reasons, right? So there is a kind of a positive to it as well, and these are some of the factors that we'll talk about during the course of the webinar today.
John, yeah, dovetail on. I mean, we really set the stage here. We look at those risk exposures in terms of people, process, and technology. And the good news is oftentimes technology will help us mitigate, but there are times in terms of changing to technology, they may create a new risk exposure. And so let's understand what those are. Let's mitigate those, and let's if we're going to accept those, let's just make sure that we're doing that in an educated manner. So we're going to give you kind of the the most important part, right? Our 10 reasons why it matters. So we're going to give you the punchline first, but I like to do that. And so some of the things, and we'll show how these things, right, are all taking place and how the trends and tactics deal with those. But payments fraud is rampant, and we will see that. Really interesting. Yesterday, we just got some results from the most recent global recovery monitor from our friends at Strategic Treasure, and we'll just see it's amazing how much more fraud is going on. And it's good news is that Treasury as a profession is paying more attention to that. Why it matters? Your company is at risk. The survey will show that no matter what industry, no matter what size. Your company writes checks. There's at least those of you in the U.S. I recently have completed a survey, a payment survey, which I haven't shared the results yet. But what we found was only 10% of companies write checks for 10% of their payments. And so the vast majority of companies are still writing checks, and a really significant amount are still 50% or more payments are written by checks at companies. Your company uses email. And so John really touched on a really high level business email compromise scams. And so those are becoming more prevalent. Your company has people-related risk exposures because in almost every case, there's going to be some kind of hands or manual intervention, even if that's virtually. Your company has process-related exposures. That's inherent in because the payments process is actually incredibly complicated unless you've been in the weeds. There are a lot of processes that are going on that you may not have been involved with. And then your company has technology-related exposures, absolutely. And then John mentioned fraud schemes are constantly evolving, and those are definitely evolving probably at an even faster pace as fraudsters realize that folks are still, even though it's been 6 months or so, some of us are still really trying to really catch up, right? So if you were really caught off guard, if your payments processes were really manual and outdated and involved a lot of paper pushing, you're probably still trying to get up the curve. And then your exposures grow as your business grows. And so as your company starts to go even across the country, as you start to go across borders, do business across borders, suppliers across borders, those things are going to be more complicated. And then, of course, fraudsters do what they do, right, all day, every day. John, which of these 10 really sticks out to you and are things that you'd like to talk about when you're talking to some potential TIS clients?
Yeah, I think that there's some great points around 5 through 7 here, that there's multiple layers of this really, people, process, and technology exposures that organizations need to think about when they're, coming up with a fraud mitigation strategy. So something I hope we talk about a little bit more as we go through the presentation today.
All right, thanks, John. And I love this graphic from our friends at Strategic Treasure. It really shows what Craig Jeffrey and his team called the battlefield. And so it just gives you, some statistics here. I know there's a pretty busy slide, but I really like how this is laid out. And so it really shows some of the exposures that we have. We talked about BEC fraud, right? And these are ways to mitigate on the battlefield, right? User monitoring, data encryption, security training, which I think is incredibly important. What I've been saying for the past several years is that employee education is often the most effective way to mitigate that payments fraud. So it's important that we invest in that. And then the firewall and antivirus, that's really where we have to collaborate with our IT team. So we have to have a non-siloed approach. Again, that technology piece is incredibly important. And I think this really shows a lot about on the technology piece, right? We keep changing the phones and the mobile, even though they help us be more efficient in processing our payments. The fact that there's exposures, right, to hacking on all those fronts, and our employees need to be educated. So again, I kudos to Strategic Treasure and all the great research that they do for us, and we'll be talking about some of their survey results. And then, of course, everybody is going to be disappointed if I don't ask you a polling question. So I'm going to go ahead and launch our first polling question. I'm just asking you to share with us over the past 12 months. Have you experienced attempted fraud, right, in each of the following areas? Checks, wires, ACH, corporate, commercial cards, and none of the above. I really wish that all of you could check none of the above. And sometimes it's actually the case that you might not know. I've seen some research when I did a lot more in the T&E space where oftentimes in a hack, people will be hacked and it'll take 6 months for them to really understand that they've even been hacked. So I appreciate everyone's consideration in answering all of our polling questions here today. Anyone interested in receiving CTP credits for today's webinar, you'll have to answer all our polling questions here today. So I'm going to go ahead and leave the polling question up for just a few more seconds. As always, we have a lot of content to get through, so let's be mindful of that. So I'm going to give you kind of the 5-second warning, and that is really interesting because I will be able to just in a moment compare the results here with what we've seen from the most recent Global Recovery Monitor. Again, from our friends at Strategic Treasure and the Treasury Coalition, and I'm proud to be a member, and TIS is a member of that Treasury Coalition as well. Go ahead and close that. Let's go ahead and take a quick peek. Again, I'm glad that 24% say none of the above. I hope that's true. I am surprised that we've had 24% have seen it on the corporate and commercial card front, so that's higher than I would have expected, and also wires. And so, I'm a bit surprised that we're seeing that, but I'm glad that people are monitoring those. John, anything stick out to you here?
Yeah, I think I expected the check fraud to be the most common one. It seems like that's the most common type of fraud that most organizations are combating. Probably wouldn't even expect that to be a bit higher, to be honest. And then, I think it's a good sign here that 25% of organizations saw no fraud attempts at all. But that number is definitely higher than I would have expected as well.
Yeah, thanks so much, everyone, for sharing your insights there. So let's go ahead and take a quick peek. The most recent results from the Global Recovery Monitor by the Treasury Coalition. This was a coalition of those that serve the Treasury profession put together by my friend Craig Jeffrey at Strategic Treasurer. And so a lot of us who serve the Treasury profession have been supporting the survey. And so we've been doing this since early February. So the most recent results, we asked if WFH is work from home fraud increasing, right? Have you seen it increase, right? Net, and so we're seeing 36%. In period 8 we saw 36%, then it was at 46%, and now it's at 53%, right? So we're seeing a trend. We don't want that, and that could be a function of that we're being more cognizant, right? As I mentioned, some people don't know, don't know when they're getting hacked and they're realizing it, but I think this really speaks to the fact that we really need to be on our toes. John, what do you think about that?
Yeah, I think so as well. I mean, I think this was theoretical in the beginning that we assumed fraud attempts would probably increase as people work from home and processes, started to look a little bit abnormal. But this survey result definitely shows that this trend is real, right? And yeah, that people need to keep an eye out for these fraud attempts. I think people are as well more cognizant of it.
Yeah, and I just want to, if you haven't had the opportunity to take the Global Recovery Monitor survey, we encourage you to do that. And also, there's some amazing survey results as well at the Treasury Coalition.com. So if you haven't had the opportunity to visit that yet, we would encourage you to go to the website and do that. So let's go ahead. We're going to dive in a little bit, and we're going to take a look at a couple different surveys. We're going to take a look at some of the results from the AFP Fraud and Control Survey. AFP does some amazing research. So I have the hyperlink there to the publicly available results. So if you'd like a copy of the presentation, the hyperlinks are there. And so again, just that payments fraud is rampant. It just shows, I believe the number on the next slide shows 81% of folks have experienced attempted or actual payments fraud. We're still in 2019. As we go to 2020, I think the numbers will go even higher. And then what we saw in terms of checks was 74%, right? That's higher than what we saw in our survey here. 40% wire transfers, a little bit higher than what we saw in our live survey results here. And then the debits and credits. And then this is what I'm going to be really looking for next year as well. Change in incidence of payments fraud, which was related to our last survey result sites, but 34% saw more based on what we've seen from the other from the results from the Global Recovery Monitor. That number was actually in the 50s or 60s, and so it's kind of like a, I don't know, kind of like a wake up call for you. And again, I like to go through the survey results, and there's some great surveys and insights that AFP does, so I encourage you to go there and get a lot more details there. Again, it's rampant. We see the trend 82%, 81%. We saw a dip down there in 2013 and 14. I wish I had some insights as to why we saw that, why we saw the dip there. But then the bottom part is just showing that it doesn't matter what your company size is, right? And it also doesn't matter what industry you're in. At the end of the day, fraudsters know that AP is stretched thin, and payments are stretched thin, and so they have success, right? And the gains that they get from that are really dependent on the type. I think checks, they might see a little bit of a smaller number, but there's higher volume. And then on the other side of it, the BEC scams can also be more prevalent as well. And then from our friends at Strategic Treasurer, they have a Treasury Fraud and Control Survey report. Again, there's a hyperlink there. They have some amazing research as well. So it's really interesting to me to be able to mirror the research. And so you're really getting a broad view of all the respondents, right, of both of the surveys. And so I always encourage folks to take a look at the research. Again, great resources for Treasury professionals, AFP and Strategic Treasurers, my favorite place to stay on top of my game. So in 2020, have experienced fraud in the last 12 months, a little bit lower than what they'd seen at AFP, 53%. But we started to see, right, and back in that survey, which is really based on mostly 2019, corporates believe that the threat of fraud has increased, right, from 2019 to 18. So I think we're going to see that go up. And then 50% saw an increase, over that 3-year period. So I've kind of, really beat this point home. Payments fraud is rampant. Any other color you want to offer here, John, real quick?
No, I mean, I think that that's the main point here, really, right? And the corporates have that perception as well that the threats are increasing, the number of threats, and I think also the sophistication of the threats as well, right, across the board are increasing. So,
Right.
yeah.
And let me ask you, back when you were in the Treasury game, John, from your experience, did you see more in terms of where you were at? What was the biggest type of fraud? Was it checks? I don't know if BEC was really rampant back then, or kind of share with us a little bit of your experience in fraud mitigation.
Yeah, so I think check fraud was something that we commonly saw. We had positive pay obviously in place,
Right.
so we typically caught most check fraud, but we still saw a lot of attempts at it at least. And BEC actually was pretty rampant back in those days as well. I
Okay.
mean, I saw quite
Right.
a few CEO, CFO email address emails
Okay.
coming my way, or to the
Right.
corporate controllers or chief accounting officers requesting urgent transfers of funds. So those were pretty
Right.
commonplace as well. I'd say, at least a few times a month.
Okay, great. Thanks. Yeah, I always share the story back in the day. It was kind of dated, but when you take a look at a positive pay file that comes in and you see your name, your signature on a check for like $100,000 that you never signed, it's a pretty eye-opening experience, right, John? I'm pretty
Yeah,
scary.
I would say so. Yeah.
And so let's dive into the exposures, right? So we want to look at people, process, technology, but also in the different departments, right? Because the payments process really goes across multiple departments, and not surprisingly, AP is the highest, but we have Treasury, payroll, procurement, and AR. But especially now that we have LinkedIn, it's a good thing. But guess what? Fraudsters can go on LinkedIn and find out, right, who your AP person is, who your payroll person is. And so I think that's why we're seeing it. And that's why we need to educate. I say everyone involved in the process, from P2P to the payments going out the door to bank reconciliation. We need to educate our folks as to what those exposures are, but also let them know that we're watching, and the consequences, right, of being involved in fraudulent activity. And then most susceptible to fraudulent attacks. This is 2019 from Strategic Treasurer. Suppliers and vendors, your bank portals, and your fintech solution providers. And so I think the point here is that you need to look at your risk exposures internally, and you need to look at it across departmental lines. So you may have a siloed view. Maybe it's just Treasury for checks. Well, Treasury, where do checks come from? AP, what are the types of checks that may have a bigger, right? And most people are on direct deposit, but if you're in manufacturing, they still have folks in procurement. And so it's that we need attention across the enterprise, and then look at outside the walls, right? We have our internal risk, people, process, technology, but also external risk. And so you're like, man, there's a lot to keep your eye on, and absolutely there is. We have to have our house in order, but we also have to make sure that our suppliers and vendors, and especially our fintech solution providers, have the right certifications as well. And then importance of payments fraud. I love these questions from Strategic Treasurer. What are your spending plans, right? So I think that's incredibly important. We'd like to see a commitment to more spend, and part of that can be, my mind, it's the education side. But in 2020, spend more, significantly more, was 19%. So we like to see that investment. And then the top areas of spend, right? BEC, which makes sense. Bank transaction fraud. I think part of that is driven by, I would say I would almost put checks in there, because I think some of those expenses are going to be like positive pay and payee positive pay. And then on our authorized debits, we might have a debit block on those side. So John, anything stick out here maybe in top areas of spend, what you see, what you'd like to see more?
Yeah, I think it's interesting to see that, from all the results we've looked at so far, fraud attempts are definitely up, but the spending hasn't grown at the same rate really as the fraud attempts are increasing, right? So that maybe indicates that organizations feel that they can address the vulnerabilities through training, improving payment policies and things like that, or maybe it's a sign of economic uncertainty in 2020 here. Maybe organizations are holding back on their spending while they wait to see how things move in that respect. But it'd be nice to see those numbers move a little bit higher too, and for organizations to make that a priority.
Thanks, John. I'm going to go on ahead and launch our next polling question. I'm just asking you to react to the statement. Those involved in the AP function at your company are well educated for payments fraud. So we see, right, that from the survey of the area target, it's going to be accounts payable. And so it's incredibly important. Don't worry if you think that your team is not, it doesn't have that high level of education, or what I call IQ yet. We're not going to tell anyone. So please be honest. Those of you interested in receiving CTP credits for today's webinar, you'll have to answer all your polling questions here today. I appreciate everyone's consideration in answering all the polling questions here today. We'll go ahead and leave the polling question up for another 5 seconds or so. Then we'll take a quick peek at the results, and then we'll take another dive into some more survey results. So let's go ahead and close survey results. Let's take a quick peek at the results. All right, I am very happy to see that we've got 77% of you agree or strongly agree 10%, you don't know. You know your homework is going to be to find out. So I think we'd like to see all folks, right, in that strongly agree. And so I know it's hard. We're all busy, especially in this virtual world. Here's a tip for those of you in the virtual world. I mean, for me, I would almost get it out of my own pocket. What my one of my actually I used to work for someone until about a couple months ago. But what they did is they actually sent out like cards for DoorDash and things like that. So I would invite everyone to a meeting and say, everyone who responds yes, you'll get a virtual card, and then let's all have lunch together. Because I think that's incredibly important there. So I think that's an area that we can do better. And so I'm glad to see we got 77%. I'd love to see those 77% in the strongly agree. And then that if you disagree at all or don't know, those are things that we're happy to help you out with. And, if you want advice or just, touch base on what other companies are doing, we're happy to do that for you. So let me go ahead and hand the floor over to John to lead us through our next few slides. John?
Yeah, thanks, Ernie. Yeah, so we're going to talk a little bit about the BEC scams that we seem to be so prevalent these days. As I mentioned, this is one of the most common forms of fraud attempt that I saw during my time as a practitioner. And, based on these survey results, that's trending here. You can see it's a method of fraud that's been increasing pretty consistently year over year from 2015 through 2019. A slight dip, about 5% in 2019, which is tough for me to understand. I would have thought that BEC attempts would probably be at the same level or even maybe a little bit higher year over year. But certainly, I think once we tag 2020 onto this survey result here, we'll see, an increase in trend again, once again for this year for BEC fraud attempts. And likewise, the departments that are impacted by these attempts are most typically accounts payables and treasury, I think, because those are typically the departments that have the approval power to actually release the types of payments that the fraudsters are targeting here. But even so, human resources departments, payroll departments, procurement aren't immune to these threats as well. You still see some numbers at 15%, 20% even falling into other categories outside treasury and AP. So you can really see that it's something that impacts everybody. On this next slide here, I think this is really interesting because the percentages here seem to indicate that this is, relatively well commonplace for most organizations to deal with. Most are dealing with at least 25 or fewer instances annually, some as many as 100 different instances of this, which really indicate that, BEC attempts are becoming something that organizations deal with maybe bi-weekly or even weekly. It's really part of normal business now to really combat and be on the lookout for these types of attempts. And there's a couple different types here that are referred to in the survey results. One are, emails from fraudsters who are impersonating vendors, either using vendors' spoofed email addresses or a hacked email address to send a fake invoice for payment to a fraudulent account information. That's about 85% for organizations. And the other common one is spoofing an executive's email address, which is the one I probably saw more commonly, and directing somebody to initiate maybe an urgent transfer or something to a fraudulent account. So a few different iterations of this are kind of emerging that organizations need to keep an eye out for, I think.
Yeah, thanks, John. And one that I had is kind of a mix here. When I used to work at AFP, we had some payments roundtables, and I used to do CFO roundtables as well for the CFO Alliance. And one of the things that I heard was it's kind of a mixture there. So they'd already been in the system, and then they were trying to commit fraud, and then they all of a sudden flooded the CFO's mailbox with all these spam emails, right? And so he wouldn't pay attention to kind of what was going through. The good news is that he immediately informed, the CFO immediately informed. And so for BEC scams, it's incredibly important for the employee education, especially for the CFO and anyone that's, John said, anyone that's got that approval authority. We need to make sure that they are extremely versed. And whenever you have a question, don't click anything, don't touch anything, and there should be a response, right? And I've talked about that on past webinars. You should have a response if you believe that you're hacked, and you need to manage that. And then kind of related on the data front as well, especially if you're holding credit card information and things of that nature. So that can be considered under this umbrella as well, and I don't think it gets enough attention. So let's go ahead and dive into some more interesting survey results. Again, the exposures here, some results again from our friends at Strategic Treasurer. We've already touched on these as well, and we've seen BEC fraud right up at the top. Just these different things we can see, right? ACH fraud, ransomware. I hope no one ever has to experience that. And then on here, we got some good tips. We'll go into a bit later how we do these. Some of these we touched on in the original Battlefield. Prompt your treasurer. BEC fraud, multi-factor authentication is great. I talked about the training for your cyber data theft. You need to look at encryption, antivirus, and firewall. So you really have to collaborate with IT, right, on all these fronts. And then check forgery. We'll talk about these later, right? Well, some you can mitigate the use of checks, positive pay, payee positive pay, and reconcile bank accounts. And then we see, I wouldn't call the fraud winners, the guys on the bad guys. Largest number of fraud back in the 2019 survey was BEC. Most attempts were BEC imposter. I thought that might be more on the check side of it. And most surprising, yeah, check fraud in Craig's survey fell down from the top spot. And then, as John just talked about earlier, the automated attacks can scale. And so again, they're going to go in through multiple points. And so again, we have a lot of people involved in the process. And again, as we're more out there, they're more social. There's more information on LinkedIn about the structure, right, of our department. So it's important that we're cognizant of that, and all of our people are up to speed, especially on email. You think it's common sense, but you know, especially now with so many emails, we have to remind our folks every day, right? Just common sense. Don't open this, don't open that, and show them and test, right? Send things out and see if people open them, and don't like embarrass people, but you know, you have to do these tests, right? I think that's important as well. From the 2020 AFP survey, the top exposure was that 61% BEC. The outside individual, this is kind of the source of the exposure, right, and third party. So as I talked about, in-house versus out, and see, these are some of the things that we've seen from outside our organization. Pretty much we've already kind of touched on these. So let me go ahead and get our next polling question here. Asking you to share your greatest concern relative to payments risk exposures, right? Is it the internal, is it the external, or is it the technology exposures? As we've kind of touched on these already. So again, I appreciate everyone's consideration in answering all of our polling questions here today. Those of you interested in receiving CTP credit, you'll have to answer all of the polling questions here today. And again, I appreciate everyone's consideration in staying on right after the webinar. The survey, I think, is maybe 6 questions. We need your help to do what we do even better than we do it. I think we offer a unique experience, but we always want to get better. If you're seeing something else in terms of webinars, the structure, the format, please send me an email and let me know. I'm always wanting to learn and get better. So let's leave this up for another couple seconds here. Let's go ahead, and then we'll take a quick peek at the results. All right, let's go ahead and share those results real quick. And so we've got internal exposures 13%, 20% technology, and then the external 67%. I'm not surprised that external is that high, and I don't know if I have exactly the insightful research results, but in my mind, from my experience, I think people really underestimate the internal exposures from their people and process. And so I'd like to see more people, not that it just might not be your greatest concern, but for some companies, maybe it should be. John, any thoughts here?
Yeah, I'd agree with that as well. I think that, internal exposure is down at 13%. It's probably lower than I would think it is. Sometimes by securing your processes internally and really having an eye on those internal exposures, you can combat a lot of the other exposures as well, right? Just through your own kind of process and policy, the way you deal with those aspects internally.
Yeah, thanks, John. So we've talked a lot about we probably scared people, which is good because we need to be paying attention to this stuff. And so let's talk about from our survey results and from our expertise here, from John and his experience, how do we mitigate these frauds? John, I'm going to hand the floor back over to you, John.
Yeah, thanks, Ernie. Yeah, I think this is a nice diagram here that really underlines some of the people, process, and technology exposures that we talked about before. So you see the 3 different layers here highlighted on this slide. First, from an organizational structure, really, how you organized for your payment process. Are you decentralized? Is there a shared service center involved? How many people are involved in that process? Because obviously that lends into, how you're securing that process, how much training needs to be done, how those user credentials are secured, who has authorization to what. So that's one component that organizations definitely need to keep an eye on. From an IT perspective, how many applications are really involved in the payment process? Are you using multiple ERPs and maybe some other back office applications to execute your payment process? That leads a degree of lack of standardization to a process, a lot of different systems to go in and out of to keep an eye on that process, and tough to put in place something that's really standardized and secure for your organization, which is a big complexity for a lot of companies that we talk to as well. And then the number of banks involved, both from an e-banking system standpoint, multiple portals to log into to approve payments, multiple sets of credentials to manage for those different e-banking systems. But also, if you're trying to put in place something like straight-through processing from your ERP systems to your banks, the more banking partners you have, the more complex some of these connectivity protocol, payment file format topics are in order to actually facilitate that processing, which is a big hurdle for most organizations that make it difficult for them to actually get to the finish line on securing their payment process as well. So I think this is a good graph that really highlights the different layers of complexities that exist for most organizations. As we move through the next couple slides here, a couple different ways you can secure those different layers. First of all, the employee at the individual standpoint here, training, obviously never a bad idea, as these results show. Some degree of training always leads to a payoff in terms of a reducement in fraud risk. Even some of these bigger categories of fraud that we've talked about during the course of the webinar here, like business email compromise, cyber fraud, things like that. That's what the highest payoff is, right? So 4x and 5x times payoffs in terms of mitigating fraud risk from BEC and cyber fraud. So, but you also see that only 70% of organizations actually train their employees. So there's obviously a lot of work to do here in order for us all to get kind of better in this category, I think. Check fraud, we talked about it before, it's rampant. It's probably one of the oldest types of fraud that we've all been dealing with on a day-to-day basis within Treasury, but luckily it's a relatively easy one to secure your environment against. Positive pay, obviously, is a must for most organizations, or for all organizations that are issuing checks. But I think a couple of these other categories are kind of important as well. Segregation of accounts, only issuing checks out of certain accounts that are just reserved for check activity, right, and not mixing that with other transactions, and reconciling those accounts daily is important for organizations too, right? Because you'll catch things right away if you constantly have eyes on those accounts. You're constantly reconciling versus waiting for the end of the month, for example, to go in and reconcile those accounts. Likewise, ACH debit fraud is something that most organizations are dealing with quite a bit as well. On this next slide here, whether it be because you have agreements in place with your suppliers where they can go in and debit your accounts, or if organizations are just doing this mainly from a convenience standpoint, right? It's important to secure these accounts as well from ACH debits. There's a couple different ways that organizations can do it. So there's, an ACH debit filters, or so-called ACH positive pay type services, where organizations can actually approve anybody who's going in to try to debit their account. And based on the survey results, about 70% of organizations are using this, which is great to see. And this is actually one of the areas where it seems like fraud protection is increasing over time, or likewise just blocking debits, ACH debits on accounts entirely here. So in my time as a Treasury practitioner, I used a combination of these, really, routing all ACH debits into one or two accounts, a handful of accounts that I had an ACH debit filter on to protect those accounts. And then across all the rest using ACH debit blocks, right? So you didn't even have to worry about, potentially having a fraudulent debit to that account. And BEC scams, like we mentioned, this is probably one of the most commonplace and one of the highest threats that organizations face today. And there's, a few really good suggestions, I think, on here for how to secure your organization from BEC fraud. First of all, 80%, here, training, that's critical, right? Train your employees on how to detect these threats, what to do if they receive one, right? Multi-factor authentication and just dual approval policies within your organization are obviously critical as well. Because if one person is fooled, hopefully two people aren't fooled, and this is caught before it actually becomes a fraud loss, right? But also, I think there's some good points on here about strong internal controls. Is there something at your organization today that allows a payment to actually be initiated and approved based on just simply an email? Because sort of combating some of those internal process weaknesses can go a long way as well, right? If all payments are really routed through a standardized process whereby invoices are approved through an authorization tool, they drop into AP for payment, payments go out through straight through processing, and maybe you layer additional approvals on certain transactions. But the more standardized things are, obviously, the easier it is to detect anything that falls outside of that standard process. And then, layering on additional controls around anything that is non-standard, even, some of these executive callbacks and things like that, right? Yeah, getting, people at a higher level involved in approving payments that are outside of the norm, I think is a good tool for businesses to have. And actually the executives seem to kind of like to be involved in these processes, knowing how prevalent fraud really is these days. So some good suggestions here, I think. In terms of bank accounts, visibility, reconciling your accounts daily is obviously pretty critical. Based on this 2020 survey result here, we can see that, really on the left-hand side here, in terms of organizations that are reconciling accounts daily, weekly, or monthly, really, less than 30% are reconciling all their bank accounts, or even 90% of their bank accounts on a daily basis. Even if you jump to weekly, that percentage only climbs a couple points here. It just seems like most organizations are doing the full reconcilement of their accounts on a monthly basis here. So obviously that makes it difficult to detect abnormalities in your account, detect if fraud is happening in those accounts. So better visibility into those accounts is critical. And likewise, just the cash visibility stats here on the right-hand side, I think, are important as well, right? So if you have visibility into all your bank accounts, you can more proactively detect things like a transaction on an account that doesn't normally have account activity, right? So both visibility, and I think visibility in a way that allows you to actually take actionable insights on those accounts here. But likewise, a small percentage of respondents here, just 70% of organizations actually have visibility into greater than 90% of their accounts. So that's a stat I think that we'd like to see climb as well. And then moving to these security principles, really what's on the top of most organizations' minds in terms of what they're focusing on for security. Segregation of duties is the highest ranking one here, which is great. Obviously, this is a critical fraud protection to have multiple individuals involved in all of your business critical processes, particularly your payments process, obviously. And then a couple of these other ones are more system level here in terms of firewalls, antivirus, encryption protection, and things like that, right? Before you get down to some of these other factors that we talked about earlier in the webinar, like multi-factor authentication, particularly for all platforms we can initiate payments out of, and principle of least privilege, really reducing your employee privileges to just what they need to conduct day-to-day business. I think this is an important one too that doesn't get a lot of attention, but this prevents the amount of damage that can really be done with one set of stolen credentials, right? So it's a good thing for organizations to be thinking about. And likewise, training, it's a low upfront investment, but a high impact activity for your fraud mitigation strategy.
John, let me jump in here and ask you a question, because I really wasn't familiar with the concept or how important it was on sanction screening, and I know TIS is a focus on that. Can you give us a little color on what that means a little bit and the exposures there that companies might face?
Yeah, sure. So depending on the, and I'm sure most organizations might have run into this just from their banks flagging a transaction as a potential sanction hit, but you can put in place technology that's proactively monitoring your beneficiary names for all your payments.
Right.
Against government sanctions lists like the OFAC list, the EU list, for example, and just obviously making sure that you're not transacting with these parties that are on these sanctions lists is important for organizations, particularly those who do business in certain regions. It's also good protection just in case certain amounts of your transaction activity is getting caught up by banks' own sanction screening and sanctions filters too, right? You can kind of proactively detect what's going to be caught in those filters and notify your banks to have it released. Without slowing down the payment process. But it's a valuable part of, I think, a fraud protection strategy, depending on the regions where you do business. It really, kind of forms that gatekeeper function before the payment is really released out to the banks.
Right. Oh, great. Thanks, John. So we're going to pivot a little bit here, and what I think is important, we'll talk about a little bit about the policy, right? And so a policy, it needs to be clear, and it needs to be enforceable, and it needs to be enforced, right? And so it's important to have a policy from our 2020 AFP, Fraud and Control Survey. It looks like, we have the folks that are a little bit bigger in revenue and more than 100 payment accounts, they have that policy. I think everyone should have a policy, right? That fraud policy, people should be educated on it, right? And so I think this is a place where we should have a specific policy where there's the segregation of duties, these controls in place, right? So we are addressing all the things that we are doing, right, to mitigate fraud, and everyone has to adhere to those, and we have to have compliance, and we have to measure that compliance. And so we would like to see this across the board. Obviously, it might be on your radar screen if you're a larger company, but It's as we've seen, it goes across the board. Just because you're a small company, don't think that people aren't interested in taking your money. All the money looks the same, and once it gets out the door, you're not going to get it back in most cases. And then on the like side, Treasury Fraud Controls Framework from our friends at Strategic Treasurer. Do you have the framework, right? Is it well understood, right? Is it current, right? North America, not so much, right? 72%. EMEA sitting at 13%. And so, yes, it's formal and pretty well understood. Yes, it's mostly formal. And so I would say that I'd like to see folks have a formal policy, and there's resources out there to help you do that. But again, it needs to be formal and pretty well understood. If you think it's too much time and effort, well, let's make sure everyone understands those payment risk, and let's monitor those, and let's check people out, right? And do some testing. John, any thoughts you might have on policies to mitigate fraud?
Yeah, I thought it was surprising that so many organizations fell into the, mostly informal or no policy
Yeah.
here. 52% within North America is obviously a high percentage, but these are the type of things that sometimes organizationally just fall off the radar, and you never quite get to formalizing these policies. Obviously, quite important to have a financial controls policy, a payment approval policy, and ultimately a fraud protection policy. So, it would be good to see more organizations prioritize the creation of one.
All right, thank you. We're going to go ahead and dive into some key takeaways, and this is the really putting a fine point on things. And so I want to convey once again that if you would like access to the slides, or would like me to send you a copy of the slides, please send an email to Ernie@treasurywebinars.com. Again, that's Ernie@treasurywebinars.com. I know there was an awful lot of information that John and I shared. I think it's all important, and this could be a tool for you to use internally. Also, we'll share the webinar recording with you. I believe they will have that posted on the TIS website. And so you might want to bring your treasury and finance and AP and everyone that touches payments in, and let them, watch this webinar with you. And maybe it's a virtual meeting, right? And get everyone to attend again, give them that little gift card for DoorDash or whatever is in your area. And so just our tips and advice. John touched on this earlier. We really need visibility into all bank accounts and all authorized users. You can't manage what you can't see, right? And so as John mentioned, we should reconciling those on a monthly basis is really a dangerous exposure to have. For me, full cash flow transparency is needed. All bank accounts, we have to make sure that we have segregation of duties. And that everyone understands those segregation of duties, and that they understand that those are being monitored. And they need to understand, everyone needs to understand that when they push a button, anyone who moves funds needs to be on alert that they are being monitored, and the consequences, right, of getting caught. And this is something where TIS really thrives, is create one standardized payment process. And I know that's can be more challenging as you get a global footprint, but I think that's why it's important to look at a company that really has the ability to communicate digitally with all the banks across the globe, and is versed in managing all of the payment formats and maintains that for you. Fragmentation causes an open flank, and as John mentioned, you have all these local e-banking tools, and that can be dangerous as well. You just want to avoid manual payments. One-offs are a playground, right, for fraud. And then strict and verifiable audit trails that allow robust controls are a must. John, anything here that you want to add more color on?
I think the points around, I always lean to the points around standardization and visibility, right? So I think, the more standardized the process is, and the more you're able to route through a standardized process, the easier it is to pick out the outliers and prevent fraudulent transactions. And then, visibility into all of your payment processes, and really, all of your accounts and things like that goes a tremendous amount of way to detecting abnormal activity and preventing fraud as well. So I think these are great tips and advice.
Yeah, thanks, John. Yeah, I think the word that I like, and I know TIS uses this, and I borrow it from them. It's standardized and then / harmonized, right? And so you take the best of the best payment processes, which often includes the best technology, right? And let's make that across the globe. So the harmonized process is important as well. Let's remove the friction, and removing the friction often involves removing like local e-banking tools and things which aren't adding value, and we're adding more people and systems, right? The more systems we have, the more people we have, the more process involved, the more potential risk exposures that we have as well. John and I talked about this as well. Avoid giving single users end-to-end responsibility. It's just that if there's an opportunity for fraud, as much as you trust someone, you never know. You have to have multi-layer approvals at the correct levels. And then you need to, I mean, it seems like common sense, but these are things we need to review, right? On at least, and I would say now it's more important than ever, at least a manual basis, maybe a quarterly basis, tailor limits to each user, right? Not only actions and function, but also payment limits per user. But again, we have to conduct business. So let's make sure we don't create bottlenecks. We need to have people with the ability to approve transactions mobilely, right? We want to avoid that. So there's obviously trade-offs. Really limit the input of payee data. So we really need to pay attention, right, to that data. Who can touch the bank account data? That needs to be separate from who can approve payments there. And then John mentioned, especially on the BEC side, filtering and flagging techniques. And sometimes there is software out there, so you can actually program your policies into the technology. It won't let you move forward, especially on the T&E side. And so I think that's important. John, anything in these few bullet points that sticks out to you at all?
Once again, I think they're all good tips. Yeah, I mean, getting as much of your payment activity going through straight through processing so that people aren't, modifying payments and things like that manually is absolutely critical. Segregating duties, putting in place approval processes within your payment process that align with your overall corporate policies, so different payment approvals at different layers is important too, I think. And, really getting that done in an automated way through use of technology can be an effective way to do that as well. And then that final gatekeeper solution, if there's some sort of AI or additional filtering going through to mitigate that last mile of risk, that can be an effective technique as well, depending on, where that risk really lies within your organization.
Right, and let's just, this is like, probably that really puts a fine point on these, and as we kind of read through these, I apologize for reading through them, but I think they're incredibly important. You'll see technology is incredibly important. Now, my point earlier was there may be risks that create, so we have, as we that down, security, visibility side, and the control side, right, that your company is comfortable with. Again, you want to educate each employee involved in processing payments relative to how they directly and indirectly impact payment risk exposures. And I think we can take this to a company-wide level and fold under some email training as well, right? And also social media. I really didn't mention that. I think that's a place where people don't see. There's a place for exposure, but that's a way where people can understand what your password might be, identify who to target. Like once they get your email domain, I can probably send any of you an email. I probably already have, but you can probably give me anyone's LinkedIn profile and I can get them an email. You want to leverage technology. We want to minimize manual data entry and manual intervention. Now that doesn't mean we don't want to have control and visibility into the data entry and management there. We want to leverage technology that optimizes end-to-end. We need that visibility. You can't manage what you can't see, and a lot of times what you can't see is fraud. Again, automation done the right way is going to be incredibly powerful to mitigate risk. And then again, we can automate internal and external controls, policy compliance, and on the technology side, make sure that your business partners have the right security protocols in place, especially on data. I believe SOC2 is one thing you want to look for here. Minimize the number of people involved in the payments process, and make sure the segregation of duty, and also minimize the number of systems involved in that payment processing. John, any just maybe a couple things, 2 or 3 things that you want people to really take away from the time they've spent with us today?
Yeah, I think this slide really sums it up nicely, but if you have an eye towards that harmonization and standardization of your payment processes, that I can't reiterate enough how much that goes towards mitigating fraud risks and really simplifying all the activities that even come before that, right? So how you educate your employees, not having that many processes to educate them on, how you segregate your user rights, how you practice, principles of least privilege in that process as well. It, really simplifies things as well and makes it a lot easier to have visibility over that process. So definitely good takeaways here to keep in mind.
Thanks, John. I'm going to go ahead and launch our final polling question as we make a few closing comments. Again, those of you interested in receiving CTP credit, you'll have to stay on for the duration of the webinar, and you also have to answer the short survey. I would really appreciate if everyone could stay on and answer the survey. We always want to know what we can do to get better and what others are doing out there that we can learn from what they are doing as well. So to put a dovetail on things from my side, obviously, it might not be surprising, payments fraud is rampant. You need to look at internally and externally. You need to look at people, process, and technology. You need to look at what others are doing and then ask yourself, why aren't you doing it? So it's not like, why should we do it? The question should be, why shouldn't you do it? So I think that's kind of a change in the mindset that people have. Again, I also want to convey that there's some great research out there from AFP and Strategic Treasurer as well. And also want to let everyone know that we have set the date for the Treasury and Finance Virtual Forum next year. It's going to be September 7th through the 9th, 2021. So we were thrilled to have TIS as a partner of ours in 2020. We hope to have them again in 2021. And in virtual forums, you should have high expectations. You should get a true virtual experience and not just a bunch of back-to-back webinars over weeks in a place that doesn't really give you the opportunity to interact with the service providers and vendors on your terms. Also want to once again take the opportunity to thank John for his tremendous insights and knowledge. I always enjoy speaking with John, speaking on Treasury Professional. So thank you so much, John. Always a pleasure.
Yeah, thank you, Ernie, as well. And thanks to everybody for joining today.
Also want to thank TIS. They have some amazing thought leadership resources on their website, so I strongly encourage you to visit the TIS website. As always, I want to say, and I mean it, I appreciate each and every one of you. I hope you all stay safe and healthy and make the rest of your day great, everyone.